Hey everyone, Steve here from My Crypto World. Welcome to another crypto report. So today we're going to be looking at the markets as we always do, have a look what's happened over the last week or so, see where our cycle has fallen, and then we're going to go into some interesting news articles that show why we are be crazy to get out of crypto right now. All of that straight after this. Okay, having a quick look at the crypto heat map, we can see that most things are in the green at the moment, which is a nice change for what we've experienced over the last 7 days or so. BNB is the only one that seems to be down a little bit, or one of the only ones down. Matic is down also, DAI is down, but pretty much everything else looks healthy. Some of the big gainers have been Solana, up 6% today, AVAX up 6%, Link, I can't quite see that, but I'm going to say it's around about 8%, so not too shabby at all. Having a look at the crypto price charts at the moment, so normally we'd like to look at what things have been doing for the last 30 days, which is over here. Once we've had a big tumble in the market, what I do like to keep an eye on is what the short-term gains are. So for me, at the moment, the most important segment in this is the 7-day chart and where things have been for the last 7 days. So as you can tell, Bitcoin's up 8%, Ethereum's up 7%, BNB is up 8.66%, and the list goes on. We've got a couple of big gainers though. We've got a few big losers as well. So Terra Luna is still down 18% this week, which is quite dramatic for that particular crypto. Avalanche is up 20%. Shiba Inu is up 6%. We've got Crypto or Crow up at 28.15%. So, you know, there's a lot of good gainers and a few little losers there over the last couple of days. FTX token up 24.52%. Decentraland, which is up pretty much 17%. Hedra Hashbar up 38.38%. The Sandbox up 29.37%, and the list goes on. So overall, still we've had most coins are making a nice recovery out of the downward spiral that's happened most recently. So again, not too bad at the moment. Let's go over to our cycles and have a look at where things are at. So a few posts ago, I don't know if it was last week or the week before, I did mention that it is highly likely, or would be highly probable, that the market may come down to its $1.484 trillion resistance line. I did that maybe, I think we were sitting up here at the time, and rightly so. That's actually, the market has come down. It's hit that exactly at 1.484 trillion, which was a resistance back in the day, back in July 2021, and is now a support for us as we've been trading above that. And that's where the markets has sort of hit and has bounced off quite nicely. Pretty much gone sideways for the last 4 or 5 days, 5 or 6 days I should say, but that's normal to see that type of movement once it's hit a support area. So we'll just have to see how the market goes. I don't really think, and I've spoke about this in my last video as to why I don't believe we're in a bear market. I do believe we're more bullish. We spoke about the RSI, how it showed that Bitcoin a few weeks ago was in oversold territory. And the last time that it fell through that and broke through that was back in March 2020, before the market absolutely shot off like a rocket. So it'll be interesting to see how this develops and what the market looks like over the next probably quarter, so over the next 2 to 3 months. But overall at the moment I'm fairly positive. I've got a very positive view about it. Now, it doesn't mean I'm always right, and I've mentioned this several times in my podcasts. Please don't always believe what I say. Go and do your own research. Of course, there's always a chance that the market may slip a little lower, and if that's the case, and we do break through this $1.484 trillion mark, then its the next resistance, I shouldn't say the last, but the next one will be at $1.131 trillion. Personally, I don't think it's going to do that, but you do need to wait and see and do your own analysis as well. Me personally, I'm trying to buy as much crypto as I possibly can at the moment. I'm big on dollar cost averaging. And what we're going to do now, this is a good segue into some of the articles we're going to look at and cover today. So, first of all, data shows young Bitcoin addresses sold 36% of their holdings at a loss. Now, this is the difference between, wouldn't say new money and old money. This is the difference between experienced traders and investors and inexperienced traders and investors. According to data from the Into the Block, addresses holding Bitcoin for less than a month decreased their supply as Bitcoin slid by $10,000 in less than a week. The article goes on to say that during such turbulence, history shows that long-term Bitcoin holders tend to stick to their positions, this is exactly what we've spoken about in the past. Some even buy the dip, which is evident by some whales and even the first country that legalized the asset, El Salvador. So what it's really saying here is that the experienced people tend to hold on in times that are tough, when things don't go according to your plan, when your crypto asset has just lost 50% of its value. The smart people tend to hang on and ride it out. The less experienced people, the inexperienced traders before, people who have gone and bought Bitcoin at its high and then all of a sudden have seen their assets diminish by 20 or 30% overnight, they're the ones that panic, and they're the ones that actually get out and sell at a loss, probably swearing never to get into cryptocurrency again. But all you need to do is hang on or dollar cost average in. Now, talking about dollar cost averaging, this article here, the third largest Bitcoin whale bought $375 million worth of Bitcoin in 11 days. Now, what I want you to note here is the article date. This is November the 27th, 2021. I'll talk to you why we're looking at that at the moment. Starting from November the 12th, the entity has made 8 consecutive purchases as Bitcoin price was declining. The first one for 1,123 Bitcoin came just at over 64,000, while the last one from yesterday, so that would have been November the 26th, was at a price tag of 57,400, and it was for 616 Bitcoin. In total, the whale accumulated 6,665 coins in less than 2 weeks. From a USD perspective, this is roughly $375 million in today's prices. Now let's just go and have a look at our chart again. Go to Bitcoin. Now November, guys, was here. That's the 10th of November, and this came out around about the 26th of November. So they were buying, where are we, 19? Oh, this is a daily, of course, so not a weekly. So they were buying here after the value had already dropped from $69,000 down to around about $58,000, something like that. Now, again, it shows you, again, we went through, again, if you have a look at the relative strength index, it shows that the crypto was actually, it wasn't oversold then, but it was on its way down. And the reason why this is important is, again, it highlights the difference between experience and inexperience when it comes to trading cryptos. So what's really interesting about this article is on the 7th of December, so that's probably less than 2 weeks afterwards, the third largest Bitcoin whale bought another $137 million worth of Bitcoin at $50,000. So this whale who's buying all this Bitcoin is actually stacking up. He is dollar cost averaging, or they are dollar cost averaging in and buying as much as they can possibly get as the market continues to fall, because it's great buying times at the moment. And again, this is the difference between smart money and not so smart money. People who have got a lot of money have made it because they know how to dollar cost average in, and they know what the effect of that will be once the market actually finishes its dip and continues to rise back up again. So that's really interesting. And then again, so we've gone from the December the 7th, so roughly roughly a month afterwards, the third largest Bitcoin whale, so this is the same person buying up, bought another $24 million worth of Bitcoin during the dip, and this was on the 6th of January. So we've gone from around about here when they were buying the dip all the way down to around about here when they were still buying. So what have we got here? It's 6th of January was around about here. So this crypto whale in that period of time has bought $24 million in one parcel, $137 million in another parcel and $375 million in another parcel. Somebody knows something. So you don't have that much funds, and you don't have, or you do have that much funds doing things, but you don't invest that much funds without knowing something's going on, or that you don't know that something is definitely undervalued. And this is why I've said to a lot of the people who are following my channel, a lot of the people in my private investors group, that this ecosystem that is now being built, regardless if you're buying Bitcoin or the total market cap, or you're looking at Luna, or you're looking at Ethereum or Theta or Digibyte, it doesn't really matter. The ecosystem that surrounds cryptocurrency now is far too big to simply fail. There are too many projects underway, and this just highlights where big money goes when the market's dipping. People are always dollar cost averaging in and buying. So the next article, again, just on Bitcoin. Bitcoin price falls to 34K as Bitcoin RSI reaches the most oversold since March 2020. The crash in March that happened in 2020. Again, the crash that happened in March 2020 was roughly the time the market did a flip and shot through the roof. Which is pretty good. Now let me see if I can bring up that. If we go back to March, let's just go to, we can do it on Bitcoin, but sometimes better to do these things on the entire market cap. Here's the dip in March 2020, as you can see here. So the market recovered from that, kind of went up slowly over the next month or two, and then after that, after around about a quarter moving, 3 or 4 months moving sideways or slightly up, it then skyrocketed. So it's very probable. What happens in the history doesn't mean it's necessarily going to be the future, but what is probable is that it may very well do the same thing again. So we'll just have to wait and see. So that's some, I guess, interesting news for those that are or have been a little bit worried about the state of the market and whether the whole thing was going to implode and disappear. It certainly isn't going to do that. This is a standard thing that happens in the market all the time. Now, also in the news, Ripple, obviously we've got a number of holders in our investment group that hold Ripple and have always been worried about it with, due course, I guess. There's no reason why you wouldn't be worried about it. But this article is interesting because it shows you actually financially also how strong Ripple is. The article goes on to say that the blockchain payments company Ripple, XRP, made it abundantly clear this week that it's not letting its feud with the United States Securities and Exchange Commission, so the SEC, hold back its business plans. On Wednesday, the company announced it had repurchased all of Series C shares that it issued to private investors back in December 2019. Ripple said the share purchase reflected the company's extremely strong position in the market and strong balance sheet. The buyback also netted the company a whopping $15 billion valuation, all while it continued to fight a $1.3 billion lawsuit filed by the SEC. Now, that's really interesting. So, for me, it just shows you that Ripple and XRP are as safe as houses, in the sense that if they're valued at $15 billion and they've only got a $1.3 billion lawsuit against them, even if they lose the lawsuit, they're just going to go on as business as usual. So I don't want them to lose. I don't think they will lose, but at the same time, that's got to give you a really good feel that Ripple are quite secure in their argument towards the SEC. And as we reported last time, the CEO wanted to, Brad Garlinghouse wants to take this to the very end. So he's willing to fight all the way through to the courts to make sure that their case is heard and their voice is heard, and that the SEC really get kicked out for doing what they've done. So we'll see how that goes. But it just goes to show you how, again, the market may have dipped and tanked a lot and people may be down a lot in their investments. This is absolutely the time to get more, to buy in. If you've got spare cash lying around, not so this isn't financial advice, it's simply what I'm doing, and if you want to dollar cost averaging and try and get some a better bang for your buck, now's the time to do it by far. Finally, we're going to have a look at Cardano, another one that's been in the market a lot lately. Cardano average blockchain load times hits an all-time high. So let's just actually, on Ripple, let's just go and have a look at XRP. We can see where that's going at the moment. So again, it's hit a nice resistance spot there and pretty much gone sideways. And Cardano will go up here. And again, it looks very much the same as Ripple, sort of bouncing along nicely across its current resistance line. Now back to the article. Cardano's network average blockchain load hit an all-time high of 94.49% due to its recent development. So that's pretty amazing, actually. The inclusion of smart contract functionality has resulted in an increase in activity on the network, as seen by an increase in the number of metrics as previously stated. Owing to this level of scalability, Cardano recorded this month both higher volumes and over 500 times cheaper fees than Ethereum when the adjusted volume was taken into consideration. That is a massive, massive saving. Elsewhere, it talks about what blockchain load is. So for those that don't know, the term blockchain load relates to the use of Cardano blocks that are currently being utilized with a score of 100%, indicating that the blocks are full or filled, and 0 showing that the blocks are vacant. So again, if you've got a blockchain load that's in the low 90s, that it's just incredibly strong. And again, another reason why I think that projects that are solid in their foundations are going to have a long way to go. Again, we're still very early in this space, so it's really, really important if you can do it. Dollar cost averaging, buy more where you can. And again, only go with projects you feel comfortable with. There are countless other. There are so many cryptos now. You can't possibly, or I can't possibly cover them all. I always tend to cover the ones that I've been watching for a long time. So which is why I generally talk about your Bitcoin, your Cardanos, your Thetas, your XRPs, all that sort of stuff. Your Sandbox, your Wax. So you want to have a look at those, but I thought I'd just leave these articles, talk through these articles today to show you that while the market has dipped dramatically, we've got some incredible good news and a lot of backing for Bitcoin by the third largest whale, as we spoke about. We've got Ripple looking to fight its way through the SEC lawsuit, and again, even if it loses, it's in an incredibly strong position, being worth $15 billion itself. And then we've also got the Cardano contracts looking very, very healthy indeed. So with all that information out there about the market, again, it's just to reiterate that the market is stronger than what we expect and what we probably think. I spoke about it earlier, but the ecosystem in the market at this stage is far too big to fail. So for those that can get in more, I suggest you may consider that as an option for your financial advantage. Again, my financial opinion only. I really only talk about what I'm doing personally on this podcast, so it's do your own research as well. I've said many times. Well, that's it for this week. Now I'm going to be taking a week off next week, so I may not see you unless I feel like I need to do a podcast for something. Otherwise, have a great fortnight, and we'll take care of yourself and each other, and we'll see you on the next one. Cheers.